Good morning. It is day 31 of the 36-month Forex trading challenge and first day back in the UK. Last couple of weeks on the cruise ship around the Med and not sleeping too well. I've got the sea legs still, so although I'm on dry land, it feels like everything's moving, and I keep waking up in the middle of the night for some reason, still thinking I'm on the ship and wondering where I am. So pretty tired this morning. The time is 10 to 6, so it's 10 minutes time. Check the 6 a.m. open. Done quite a lot of the analysis last night. I've got a few trades on, 5 trades on. So we'll see how the market opened at 10 p.m. last night and see what's on the table for the start of the week. Well, good morning. It is Tuesday morning, day 32 of the 36-month Forex trading challenge. Feels strange to be back in the UK after 2 weeks away. You kind of get used to being on holiday, which is never a good thing. But you know, get used to a different environment. I really enjoyed getting up early on the ship. The view of the ocean, very calming and very relaxing. Back in the UK, I feel a little bit like the pressure's on again. And pressure in trading is never any good, and this is one of the problems with trading, I think, as a profession. You know, this urge to action, this feeling that you've got to be doing something all of the time, and I feel a little bit like that this morning. I've got 4 trades on. My pound US dollar cable trade was stopped out yesterday on a trailing stop. Nice profitable trade. So I've got 4 trades on. 3 are in profit. 1 is currently kind of approaching break even. That's my Aussie dollar short. I'll show that on the screen in a moment. But there's no other signal showing up, and really there's nothing to do apart from the morning market analysis. And you know, one of the problems with trading, which I think is one of the reasons people are attracted to day trading, is their need to make money right now, and their need due to conditioning as to how we tend to operate in the normal world. You go to work, you earn money for being at work, for putting time, energy and effort in. But in trading, it's not like that. In trading, you know, you can use minimal effort and make maximum reward, or you can use maximum effort and make minimum reward, and that's one of the problems of overtrading. So what I'm reminding myself of this morning is the fact that trading is a very different profession to anything else. It's about the plan, it's about the rules, it's not about trying to create opportunities that aren't there. It's not about entering suboptimal trades, because in actual fact, all they'll do is cost me. They're not going to make me money, they're going to cost me money. So it's just about managing those positions. If, you know, 3 out of 4 of those positions come off and hit targets, you know, that could make the month, and that's really all I need to do. So in a lot better position. Month 1 was difficult. Month 2 is going much better. And there's still plenty of time left, potentially not only to hit month 1's target to get back to where I was supposed to be, but also to hit month 2 target as well, in terms of that journey compounding returns to hit that target within 36 months. So in today's blog post, I'm going to review the trades. There's not much to say, and I'm also going to talk about where is it? It's over here. I'm going to talk about this book which I read on holiday. You'll see that in reverse on the camera. It's called Trading Mentors by Philip Teo. I found this on Amazon before I went away. I like to read books about other traders. You know, I don't tend to read books anymore about you know, trading strategies and this, that, and the other. I do from time to time to get ideas, but I have my strategy. And my strategy fits well with my personality and how I like to trade. So I like to read about inspiring other traders. So read this book. It's quite often the books that I've read in the past about traders, successful traders, have been US-based traders. This book very much linked towards Asian, Southeast Asian traders, and gave some really interesting perspectives. So in today's blog post, which you can read at stgforex.tv, I'm going to highlight some of the key messages that I got from that, some of the key takeaways that I got from that, which might be useful. Anyway, today got quite a tough morning. It is, what time is it now? It's 20 to 9. I already feel like I've done a day's work, been up early. I've got a 3-hour session of jiu-jitsu, private lesson, class, and then sparring. So physically it's very demanding. The good thing about the jiu-jitsu is it takes my mind completely away from the markets. When I come back from jiu-jitsu to catch the 2 p.m. candle, I can see it with fresh eyes. And one of the other things to say on the matter I was talking about earlier, one of the reasons that I make the weekly videos and I make write the blog posts is because it gives me something to do while I'm waiting for the trades to play out. So with that said, I have just published on YouTube week 6 part 1, week 5 and week 6 both in 2 parts. I was on the cruise, and this is trading around the Mediterranean, taking the ports of Livorno, the port I can never say the name of, Civitavecchia, which is gives you access to Rome, and Cartagena, and also Gibraltar. So if you go to STG FOREX TV on YouTube, you'll be able to catch that there. And as you're watching this video on YouTube, if you scroll back and see the previous videos, you can see the whole journey from day 1 in this challenge to date. Anyway, with that said, let's jump into the charts. I'll give a quick review of where we are, the pound-dollar trade that I was stopped out of yesterday, and the 4 positions that I'm currently in. So here we go. First up, pound-dollar cable. I was in a short from here. I roll my stop aggressively. This is the 240 chart because we were coming into important levels here. This is the 10, 5 and 3 year low. So you know, you're always going to get some bids off, or usually get some bids off that. Let's just double check that. Yeah, 10, 5 and 3 year low. In terms of the daily chart, this is in a downtrend on the week. The turquoise line's in a downtrend on the day. We'd also come towards the bottom of that daily trend line. I like to define a trend line as kind of 2 touches either side. Gives me a rough guide. It's never an accurate thing to draw a trend line. Everyone will draw them differently. So I roll my stop aggressively, expecting or anticipating a bounce here. I just missed out on hitting my target here. So didn't take half the position off here, unfortunately. I was with the spread, this candle here touched 1.2015, but with the spread didn't take me out of the position, or half of my position. So we're now tracking up. What I'm looking at here on cable is possibly if we get the 10 exponential moving average crossing above the 50 simple moving average, we could be in a position buying off these lows to get long on this pair, with quite a bit of distance up to the 200 simple moving average. So there could be a reversal in this pair, and if the signals show up, I'll definitely take that trade. I'll only take this trade if my sentiment indicator switches from sell to buy. At the moment it's sell, so at the moment there's not an opportunity for me to get long based on the signal, based on or lack of signal, and based on my sentiment indicator. The other trade I'm in here is Australia dollar, US dollar. So again, it's a similar story. We've come into the 10 and 5 year low. I sold on the 240, sold twice. I sold here, I sold here. This was a mistake based on my new rules of only selling above the center line of the daily downward trend line. So, you know, made a mistake here. I've learned from it. It's allowed me to fine tune my rules. If I'd have sold here, which was the better place to add to my position, then of course this would be in the money. Of course I'm out of the money because my entry was here. So what I'm looking for now, we're still under the 50 simple moving average. I'm looking for a break below here and then a close down towards the bottom of the range, the daily range. On the weekly, you know, there's still quite a bit of distance to fall, but we are at this 10 and 5 year low. So it's not surprising exactly at this level you're getting bids off that level, but the pressure in the market from the weekly, the daily, still looks to be down. My sentiment indicator is down as well, so I'm holding. A little bit frustrating, but I'm holding on. On Euro Swiss franc, it is slow progress. I sold here. I'm looking to hit my target here at the bottom of the daily trend line. It's a kind of similar story. Weekly, turquoise lines, daily, gold lines.
So this pair has still got potentially some way to fall, albeit it's slow progress. YX candle here, X candle here, so the pressure is down in the market. We're underneath the 50 simple moving average. My stop is well out of range, so it's a question of time and holding on to take half the position off here should we get there. And then my final two trades, I have a long position, my first long position of the challenge in Euro Australian dollar. I bought here, and we're now tracking up on what looks to be an upward trend. We got some pressure overnight, YX signal here, not worried too much about that, it's not at any particular level. The signals, the SMA signals and the daily 10 exponential moving average are all pointing upwards. This is the 240 chart. There is a high probability that we're going to hit this level here, take off half the position, roll the stop to entry, and then see where we end up. We've got this level up here, which is the, what is this? It's an important level. It is the 5 and 3 year high. So, you know, we could push through there, but we're then heading towards the top of the weekly trend line. So, yeah, we'll see. But for the moment, so far, so good. Going to hold on to this position. And then finally, I have a short in New Zealand dollar CAD. This is the 240 chart. So it's a bit similar to my Euro Swiss franc chart, Euro Swiss franc trade. We are tracking lower. I entered here. I'm looking for my target here, which is slightly above the bottom of the daily trend line. We've got the Z signal, so the pressure looks to be down. The sentiment indicator is telling me to sell. So just waiting for this to trigger. You know, patience is a virtue in trading. The temptation, as I said earlier, is to try and make things happen when things aren't ready to happen. The market will pay you when it's ready, and your job is to be ready to take opportunities when they show up. The one thing you can't do is determine when those opportunities are going to show up. You've got to be there to ride the wave. You can't create the wave in the first place. So that's a quick summary. 4 trades currently on. 3 are in profit. The Aussie dollar trade is under a bit of pressure, but I think is turning around. As always, I'll be following my signals, following my rules. If my signals tell me to lighten up on the positions, I'll be doing that. Process of cutting losses to then hold the winners for as long as possible to maximize any potential gains.
Wow, what a difference a few moments makes. I just come back from jiu-jitsu, so I'm a bit red in the face, and basically left jiu-jitsu, looked at my eToro account. 3 out of my 4 trades were in profit, exactly the same as this morning. I'd rolled my trailing stop on a couple to entry. I'm going to explain more about that when I get into the charts in a moment. By the time I got home, had a shower, sat down in front of the computer, all had changed. News out of the United States that the United States is going to delay tariffs on China, basically sent bids into the market on Australian dollar pairs, frenzied buying on the Aussie dollar, basically risk on. And what that's done, having just looked at the charts now, my Aussie dollar short is under pressure, even more pressure. And my Euro Aussie dollar long, where I had a paper profit, decent paper profit, has been stopped out, and my Euro Swiss franc short has also been stopped out. Both of those latter 2 trades stopped out for no gain, no loss, stopped out at entry, just the broker fees to pay. Yeah, interesting. This is news. There's news that's scheduled, and I look at this in Forex Factory, and then there's surprise news that just comes out when it comes out. So the news that's scheduled, I did my very best to protect myself from that news, which means tightening up on stops. It means not trading before those news announcements in irrelevant pairs. But then there's surprise news that just comes out. Could be a tweet, could be an announcement, could be anything, and that's the stuff that, if you're not careful, can really hurt you. So you know, put in today's blog post, which you can read at stgforex.tv, put in a statement, a quote, advice from the legendary trader Paul Tudor Jones, who says that to trade successfully, you first, or before you make money, you have to learn to play great defense. So although I've lost the paper profits, having capitalized on that, I've played defense. Because I haven't lost money. I've followed the rules, so I should feel happy about that. But this is a frustrating business. This is a frustrating business that requires an edge. It requires a plan that you follow to the letter to take away the emotions, and it requires the discipline to execute that plan. So yeah, a bit of a frustrating afternoon after a pretty good start. Well, some heat overnight, then the market came back in the favour of my trades, and then of course this surprising news out of the US, knee-jerk reaction. I suspect this knee-jerk reaction will give me opportunities to enter potentially these trades again, possibly at better prices. But for the moment, I'm still in 2 trades, and let's jump in and just have a look at what's happened in the space of not very long at all.
So here's this news report that just came out 37 minutes ago. Additional tariffs on some products will be delayed to December the 15th. Let's just jump into this. This is in Forex Factory, and yeah, look at this. I love all these comments. I use these for contrarian signals generally. What are people saying? Pushing the markets around, whatever. Okay, doesn't really say too much. Newbie, why did this news affect JPY? Isn't this USD news? Well, who knows why it affected JPY? Basically, it's risk on, so people have more risk appetite now. Japanese yen is a safe haven currency. People tend to buy the yen when there is risk in the markets. If China and the USA are they're not fighting, or they're not fighting for a little while longer in terms of tariffs, then that would potentially signal a risk on scenario, which is why there's been spikes across a number of the pairs. In my Aussie dollar trade, frenzied buying here, offers starting to come in against those bids. This is a good sign for my short setup. If we close at 6 p.m. below the 50, that'll be a really good sign for my short setup. I've not been stopped out in this pair as yet. This level appears to be holding. So sometimes when the news is okay, let's say the news is positive for Australian dollar, there's a frenzied bidding, and then the sellers turn up. Well, that can be a good indication that there's further downside potential. But I'll need to watch and wait. At the moment, there is nothing to do but to watch and wait in this particular trade. In Euro Swiss franc, we traded down here. This was when I got back from my jiu-jitsu class. We were down touching the bottom of the daily trend line. My target was here, so good paper profit here. About to, I was considering rolling the stop tightly just in case this reversed. By the time I came back to the charts, the news was out, and we got this huge spike here, which took me out on break-even entry stop here. So for no gain, no loss. So I'd rolled this stop more tightly because I could bring it closer, just outside the 50 simple moving average, and what I call evolving reward to risk. If I am, if as the price moves down, what I'm risking to gain a little bit more down here, the risk element tends to be bigger than the incremental reward. So I tend to, it's one of the reasons I roll my stops in. I've talked about this on previous videos. So out of this trade now, frustrating, but played good defense. There will be another trade. That's absolutely fine. So for the moment, out of this trade, not looking to do anything else, not looking to get long, not looking to try and chase this move. I think this move is short-lived. I think the frenzied buying on the news, often the real move is in the opposite direction, but time will tell. We'll see. I'm following the signals and trading my plan, irrespective of the news. Then here's my Euro Aussie dollar long. Similar story. I'd roll my stop pretty tight because I could get my stop just outside the 50 simple moving average. We were sort of here at the time. Came back, it was looking positive, and then suddenly the news came out, bang, stopped me out. Again, this is no gain, no loss. So played decent defense here, and this offer pressure is looking to meet with some bids now at the bottom of the daily range. So there may be another opportunity to get in here. If this candle closes above the 50 simple moving average on an S signal, then I'll buy this pair again. It'll be at a similar, probably a slightly worse price than I was in originally, but this trade still remains valid if the signal shows up. And then finally, New Zealand dollar CAD. So this is kind of not really doing too much. New Zealand dollar CAD, just tracking sideways here. It doesn't really know what it wants to do. This is my entry here. I am looking to hit my target here, but for the moment there's nothing to do. The simple moving average, the exponential moving averages are tracking downwards nicely, so we're in a downtrend here, and on the bigger picture, weekly downtrend. So just need to hold and see what happens.
Well, good morning. It's 6:10 on, what day are we on? Wednesday morning. Pretty tired today. Tough jiu-jitsu session yesterday, aching all over, woken up with a sore throat. Late night, my son banged his head, my youngest son banged his head on the corner of his bedroom cabinet last night, so ended up in hospital. So my wife took him there. So been a rough last 12 hours at least, well, maybe 24 hours. Got a busy day today as well. Had a quick look in the charts this morning, still in all the trades I was in at close of play yesterday, but a test this morning. My Aussie dollar trade is at a position now where I have signals to exit, which means I need to take a loss, cut my losses. Always difficult. But part of my rules, so going to take a look at that when I get back upstairs. But for the moment, bit of breakfast, strong coffee, and then I'll jump into the charts. So in the city now, I'd forgotten that I got this second session of this employability session that I'm delivering to some young people this morning. So heading into the city now. Just parked the car and walking in. Means I can't see the 10 o'clock close, but checked the positions before I came out, and got 3 trades on. Aussie dollar short is still in play. I talk about some fine tuning of my exit rules that I've made today for a specific reason. A specific set of circumstances showed up, and you can read about that in day 33 of the blog stgforex.tv. I also have a short on in US dollar Swiss franc, and that's turned around now and is going in favour of the direction of my trade, so that's good news. And New Zealand dollar, Canadian dollar is kind of standing still, tracking sideways, but I'm still in that trade. There's no signals turned up to tell me to exit, so I'm still in that trade. So walking into the city now, very wet. We'll see what this employability session is all about, and we'll check in later. So the moral of today's story is don't forget your umbrella. It's absolutely pouring. Just walking back from the employability session, went pretty well. Enjoyed it. Always like to give back, to share some knowledge, to try and inspire some young people. So really enjoyed that. Whoa, just heading back to the car. Get back in the car. Got another meeting this afternoon. So not too much time in the charts today, but that's okay. Stop loss is in place, so nothing too much to worry about. Let's get back to the car. Let's head home and let's get dry. So finally back at the ranch. Got absolutely soaked earlier, but managed to dry out. And yeah, just checked into the charts. I'm going to dive into those in a moment. Well, in fact, let me save that for when I dive into the charts. Let me chat about a couple of other things. I delivered this employability seminar this morning, and to a group of young people. And what was very evident from that, and something else that happened this morning, is that really in this life we're on our own, and the facts in the job market, there's no such thing as a secure job anymore. You can be fired or hired at a drop of a hat. Who knows? Really in life, it's about looking after yourself and taking personal responsibility for yourself. I got a sense of this from the young people. You know, they're focused very much on getting a job. They're kind of influenced by what people tell them and as to what they should be doing and what kind of job they should be getting. But in actual fact, you know, there is an opportunity through trading. I certainly believe this. To be self-sufficient, to work for yourself, to work from anywhere in the world, as I kind of proved over the last couple of weeks on the cruise ship, and to make your life what you want it to be. So you know, trading is something that you know, has been good to me and continues to be good to me. Something I enjoy, which was the other thing that came out this morning. You know, the fact is you should follow your passion in life, whatever that is. And before I got to the employability seminar, the employability training course, I was walking through the city, and in the space of about probably, I don't know, 50 meters, I came across 3 homeless people. And the first guy that I came across asked me for some change. I didn't have any change, and I walked past. I said, "Sorry, I don't have any change." I walked past, and I stopped, and I went back to this guy, and I said to him, "Look, I haven't got any change, but I'll go and buy you a coffee, buy you some food, if that would help." And we agreed I'd go and buy him a coffee. I went to the coffee shop, bought him a coffee, came back, gave him the coffee. I got him some water and some food as well. And he was really grateful. And you know, I said to this guy, I said, "Why are you on the street? What happened? What happened to put you on the street?" And he told me a story that he lived on a canal boat. His canal boat, for whatever reason, burnt down. His insurance policy was not up to date, and as a result, the insurance company didn't pay out. He lost his home. He found himself on the street. And I said to him, "Well, what are the local council doing for you? What are some of the local charities doing for you, the homeless charities?" And he said, to be honest, not a lot. He'd been on the street for 2 years. And it really hit home to me, this and what we talked about in the employability seminar, that in actual fact, you've got to make your own way in life, and you can't rely on others. You know, the council hasn't stepped in and helped this guy. The homeless charity hasn't managed to house this guy after 2 years. You know, in life, it's important to try and be self-sufficient. For me, trading is something that is a skill you can develop yourself. It's something that you can do yourself, as I said, wherever, whenever. From a psychological point of view, I think trading is very good for your own self-development, self-awareness. You know, if you follow your passion, you never work again. So just got me thinking today, and I thought I'd just share a couple of thoughts off the cuff on that, you know, explain a couple of the reasons why I think trading is so important, and a knowledge of financial markets and a knowledge of how to be in financial markets is probably actually something that we should teach, or people should teach in schools. Half the stuff, and I said this to the students this morning, half the stuff I learned in school I never used, probably more than half the stuff. The majority of the stuff that I use now, I've learnt probably in the last 10 years. The trading stuff is pretty much all self-taught. I've sought out mentors, one mentor in particular, but the majority of it comes from this mentor and the the books that I've read. So we can always be learning, we can always be curious, and I believe that's how we develop in life. Anyway, with that said, I've probably rambled on enough. Let's jump into the charts, and I'll give a quick overview as to where we are pretty much exactly midweek Wednesday afternoon.
First up, Aussie dollar short. Overnight, I got a signal here on this candle. The 10 exponential moving average and the 30 exponential moving average cross back over the 50 simple moving average, which is a signal for me to lighten up on the remaining 2/3 of the position that I have on. I took one off here, but I missed that signal. It's 2 o'clock in the morning, and I can't be in front of the screens 24/7. So I came to my screen this morning, and on this candle here, I'd seen that the market was actually moving in my favour. And it raised a question, which I've discussed in today's blog, which you can find at stgforex.tv, day 33. What should I do? Should I still take this position off? Or should I keep this position? It's starting to work for me now. So what I've done is fine-tune my rules slightly to say that if I miss an exit signal, as sometimes I will because I'm not around, then providing the market's moved in my favour, having missed that exit signal, what I'll do is I'll move my stop to where I would have got out at that exit point if I'd been around to take that exit, and then I'll continue to hold the position if it goes in my favour. And this is exactly what's happened on this pair. So what's happened here on this candle, I rolled a stop to here. We've now broken down. We're trading now below the 10-year low, and this is the adding to the position that I'd added to incorrectly now based on my fine-tuned rules on the daily trend center line. But we are tracking down now. So there's every chance that this trade could get all the way down here and turn out to be a profitable trade. This new rule, I think it fits well with my personality. It's very difficult to exit positions, particularly if when you get the exit signal you missed it and then the trade is starting to work for you. So that's where I am with this particular trade. US dollar CAD is a new trade that in fact not US dollar CAD, US dollar Swiss franc is a new trade that I have on. I opened this yesterday at 6 p.m. Not quite sure why my mouse isn't working quite well today, but anyway, so this was a full house strategy. We trended down. This was the spike on the news that the US was delaying tariffs on China. This spiked up. We then got this rejection, reversal, traded sideways overnight, and have started to trade down back under the 50 simple moving average today. There's no exit signal here. The 10 exponential moving average, the 30 EMA, and the 50 simple moving average are all in line. So we're about halfway point between my, in fact more than halfway point between my stop and target. So there's a high probability we could get down to my target where I'll take off half of the position. And then finally, my New Zealand dollar CAD trade. This has been somewhat frustrating, having got in here. We've kind of tracked sideways, albeit we're dropping down. It looks like we've had a bit of a spike here, traded up to the 30 exponential moving average, looking to get some offers on that. So we're just charting a path down the center of the daily range. Inside the 50 simple moving average, this trade is in profit. So I'm holding this. There's no reason to do anything. The exponential moving averages and the 50 simple moving average are still in line. So I'm just holding this to see whether we can hit the target. So that's pretty much where we are for today. As I said earlier, not feeling particularly well. Got a lemsip here by my side. Going to be an early night tonight with a view to waking up fresh tomorrow, ready to see the markets from a fresh perspective and see what Thursday morning brings.
So it's Thursday, around about 20 to 6. This is the first broadcast for the day. It's not been a great day. I woke up this morning not feeling great. In fact, I didn't do my morning market analysis at 6 a.m. I got up, felt terrible, went back to bed, did my market analysis a little bit later on before the 10 o'clock close. Today really has been about cutting losses and getting out of positions. I read some narrative last night, some of the top advice from some of the greatest traders of all time. And the advice that keeps coming through is to cut your losses and to cut them quickly. Give the trade enough time to breathe, but then if the trade's not going in the right direction, then just get out without question. I have specific rules to do that, which I'm following now to the letter, which is really helping. The other thing that came out of this document that I read was that you should never pyramid your losses. So if you're losing, never add more to a losing position. That's when you should be thinking about cutting. But you should pyramid your winners, which is part of my strategy. So I was pleased to read that I don't, if I'm buying a pair, a currency pair, then I'll buy it at a certain price, then I won't buy again until the price has risen, or vice versa for a short sell. So I was pleased to read that. But today really has been about cutting losses, getting out of positions that weren't really going anywhere. Having said that, I have entered a trend trade on Euro Australian dollar, which is progressing very nicely. So with all that said, let's jump into the charts, and I'll show you what's going on, and I'll show you what's happening.
First off then, this Euro Australian dollar short. Let me just explain what's going on. This is the daily chart. You can see on the daily chart, we've been progressing upwards nicely on the weekly trend lines. There was, if I get rid of the annotations for a second, where are we? Hide annotations. That's not going to work. Let me try that again. You see here there was a test of the 5 and 3 year high here. It was tested here, rejected, tested here and rejected, which kind of gave me a clue that this trend might be over. But that's not sufficient for me to take a trade. I then go to my 240 chart, and what I noticed was that the daily trend had been up, but here price had been respecting the 50 simple moving average very well. We got a nice trend up, but here price has started to close below, giving me a clue here that price wanted to go the other way, that something was maybe changing. I got my entry signal on this candle here. I got the 10 exponential moving average and the 30 exponential moving average closing below the 50 simple moving average, but I had to wait, in line with my rules, until the 50 simple moving average had gone flat or pointing in the direction of my trade. So I entered here, and now have enough room to get to target 1 just to the north of the 200 simple moving average, and this trade has progressed very nicely indeed. So the factors that have come into play is this test here of the 5 year high, the fact that the price has stopped respecting the 50 simple moving average. I got my signal here and I've entered here. So my job now is to hold this till we hit target. Then if we do hit target, roll my stop to entry, and then just see how far this can fall. Now, how far could this fall? Well, it could fall an incredible amount of distance here. It could fall all the way down here. Could fall even further. Perhaps we're heading back to the 5 and 3 year low. We've got the 5 and 3 year high. I don't know, but at the moment this trade is working. I'm sticking with it, and I'm going to hold it as long as possible. My New Zealand dollar CAD trade, yeah, it's been a bit frustrating to say the least. This is on the 240 chart. So what happened here, I entered here, we've come down, we didn't quite hit this level. We're now tracking back up. I got an exit signal to exit a third of my position when the 10 exponential moving average crossed over the 30 exponential moving average, and I may get a further further exit signal if these lines cross the 50 simple moving average. So there could even be a long signal here potentially for me to go long, but I won't know that until that happens. At the moment we've got this structure level here, so for the moment I'm happy to be short, but I'm starting to be put on alert that maybe I'm not going to be short for too much longer. If we jump out to the daily chart, yeah, we're kind of tracking towards the bottom of the weekly trend line, so there could be a possibility that this is a reversal back up, but for the moment my signals are telling me to hold the short, but very quickly could tell me to get rid of the short and to go long. So I'll just wait for that to happen. And into the major pairs on US dollar Swiss franc, the Swissy, I had entered here. We tracked down a little bit, we then reversed. I got a signal to get out, so I cut my losses here when the exponential moving averages, they cross one another and they cross the 50 simple moving average. So got out here. There isn't a possibility at the moment for me to get long because my sentiment indicator is telling me that I should be short this pair. I'm just looking at this on the other screen. Yeah, this is a strong short on my sentiment indicator, so there's no opportunity for me to get long until that sentiment changes. So I'm out of this position for a very, very small loss indeed. Australian dollar, US dollar. Okay, so what I did overnight, I rolled my stop tighter. We're at this 10-year low here. I think it's the 10-year low. Yeah, 10-year low. So there's every possibility of a reversal here. There was good employment news overnight. It's caused this bounce. It stopped me out. This trade, having took off half the position at position 1, even though I added late here, was actually a winning trade. I took money from the market on this trade. Frustrating trade, been in it for a while, but yeah, it was a winning trade, although at times it didn't feel like a winning trade, but pleased to be out of this trade now. In terms of the last trade to talk about on this particular video, or particular element of the video, I am in a long position on US dollar CAD. You can see on US dollar CAD that yesterday we closed above the 200 simple moving average on the daily chart. On the weekly, now on the weekly, this technically doesn't qualify for a full house strategy. Because we haven't had a weekly close above the 50 simple moving average, and for my full house strategy for the week, daily and 240 charts, I need the signal to be in the direction of where the simple moving averages are telling me. So technically this really should have closed before I took this trade. I'll be honest, I forgot to check that and I entered the trade, so technically I broke my rules. But this trade has started to progress in the right direction. So for the moment, I'm going to hold it. I entered on this Z candle here underneath the center line of the daily range, so it gives me enough scope to get to the top and achieve at least a 1-to-1 reward to risk ratio. Straight off the bid here, my buy here, we've gone up, we seem to be progressing this way. So there's a reasonable opportunity we're going to hit my targets. So for the moment, I'm going to hold. We've got 1 day left in this week, so it's very probable that this candle will close above the simple moving average, which means that on the weekly I'll be in line with my full house rules, which means I'm kind of comfortable with where I am with this particular trade. So that's it as to where I am. Some frustration on one of my trades, but on 2 of the trades progressing nicely in the direction that my signals have told me to go.
So the end of another week, it is Friday, around about 5:05, and the weather is horrendous. Who would have believed this is August? Just been out, got absolutely soaked, got soaked earlier in the week. Been feeling rough this week. I got up this morning, did the market analysis, which prompted some important decisions in terms of my trading. I'm going to talk about that when I get into the charts in a moment. In today's blog post, I talk about some enlightenment. You know, this is nothing revolutionary, but I guess it's important for my trading evolution and trading journey. And this piece of enlightenment is really about cutting losses. What I talk about in today's blog post, which is day 35, which you can find at stgforex.tv, is about cutting losses. And if you read any trading books, they tell you cut your losses short and let your profits run. It's all over YouTube. All the greatest traders tell you to cut your losses, and I kind of know that that's the right thing to do, but actually doing it, as I've spoken about in previous videos and previous blog posts, is a lot more difficult. But what I've realized this week, I've been forced to cut a number of positions, or lighten up on a number of positions, and I've done that. And when I jump into the charts in a moment, before I jump into the charts, I'll just show you the screen I'm referring to and what I talk about in the blog post, is that I've had to trim a few trades, and actually in trimming those trades, what it's done is save me from a big loss, i.e. a 2% loss, i.e. price hitting my initial stop loss on a number of trades, which has meant that this week is looking like I'm going to be closing out profitable off the back of one particular trade, but a number of shavings and lightening ups, if you like, on other trades. So I'm starting to really believe and get to grips with the fact that cutting losses is an important part of my strategy, and I'm finding it a lot easier to actually do that, and to do that without emotion, to do that without worry, and trusting in the fact that, again, as I talk about in today's blog post, trading is a little bit like surfing, and I've got to be in the water, I've got to be in the market, I've got to catch the wave. But when I catch a wave, I don't necessarily know whether it's a wave that's going to take me to shore safely, or whether it's a wave that's going to crash me into the rocks. And as I get on the surfboard and I start to ride that wave, the market's going to give me clues, and this is where my lightening up or my exiting position signals show up. And if the water's rough, I'm not necessarily going to make it to shore. The market's going to tell me that, and the ocean's going to tell me that, and it's important I get off the board before I do get crashed or dashed on the rocks. So very similar, I think, the surfing analogy to trading. So I'm doing more of that, getting out of positions early, and I'm looking for that or those big moves, those big trend moves to ride, which is how I'm going to pay for the month, how I'm going to hit the targets that I've set. But just a bit of analogy today. You can read more about it on the blog post. But let me jump into the charts now, and I'll finish off the week with a quick roundup of pretty much everything that's happened, and what I'm doing and what trades I'm currently in.
So first up, my weekly trade management sheet, and what I want to show you on here is what I was talking about in terms of cutting losses. So this tracks all of my trades that I make in a particular week. If they're in red, it means the trade's closed. If they're in green, it means the trade is live. I've got my trade number, strategy, risk. So if the position goes against me and it hits my stop loss, what the risk is, potential losses, the reason for exit here, and the result. So the result here is in red, but actually it's a profit because it doesn't have a minus sign in front of it. So what you'll see from here is that I made a profit this week on cable, and I've shaved a number of positions: US dollar, Swiss franc, euro, Swiss franc, euro, Australian dollar, and New Zealand dollar CAD. I've lightened up twice on this short already. I'll show you that in a moment. So I've lightened up on, got out of this position, lightened up on this one, in fact got out of this one, lightened up, got out of this trade, and lightened up on this trade. So quite a lot of lightening up on particular trades, which has actually protected this this profit. So where I stand at the moment in the week, unless anything happens before the 10 p.m. close tonight, I've made a profit of £648. This is my risk exposure stuff down here, but just wanted to show you that. And this is one of the tools that I use. This is one of the tools that I use to get inside my trading, inside my own head, and I can start to see the benefit of cutting losses really, really driving home. Anyway, with that said, let's look at some of the positions that I'm in. So as I'm on this street, on this the commodity synthetics at the moment, we'll do things slightly in reverse. I have a short on euro Australian dollar. Got in here. This is progressing nicely now. We're about halfway to initial target. Going to hold this, see where we end up. That's a good position for me to finish out the week in. I have a position on in where are we? New Zealand dollar CAD. Yeah, tabs are playing up a little bit there. New Zealand dollar CAD. This is where I've lightened up on the position. I sold here. The market tracked down towards my target, then tracked back up. Got some signals with my exponential moving averages and simple moving average, which means that I've exited 2/3 of the position, but price is now starting to track down towards my target. I've still got 1 out of 3 of my initial position on, so could be a possibility that this could be a profitable trade after all. Lightening up on those positions, I mean, it's not really cost me very much at all. New Zealand dollar CAD, yeah, so I'm in the hole for £91. Two very small marginal losses on that. In fact, let me drag this over to my other screen, which helps me track my trades a little bit easier. And the other trade that I have on is in commodity synthetics, is CAD Swiss franc. Now, I took this trade on a trend strategy, and what that means is price had tracked down on the 240 chart, fell to make a lower low, The 10 exponential moving average had crossed above the 50. I bought on the close of this candle, and we're kind of stagnating here a little bit at the moment. Now, for anyone short, the stops are probably here. If we get into those stops, we could potentially ride up to hit my target up here. If I look at this on the daily chart, you can see that it is a counter trend, so it is a trend move in the other direction. This is the daily trend in gold and a weekly trend in turquoise. So I need to be careful with this trade, but you know, the signal showed up. We failed to make a lower low, and there's every possibility we could get a retracement back up into this level, which corresponds with the simple moving averages on the daily. Now, I did make a slight mistake on this trade. One of my rules says that I can't go against my sentiment indicator if my sentiment indicator is biased and favours one particular direction. My sentiment indicator is sell, and I've bought on this pair. A bit of a mistake, but for the moment, while this is holding in the right kind of territory, I'm going to hold this position and see where we get to. So yeah, a bit of a mistake on that, but the trade's in profit, and I'm going to hold it and see where we end up. On the majors, this was a short. I was in from what was it, the 13th. So yeah, earlier this week, I sold up here. We tracked down a little bit towards my target, and then I got signals here to exit the position. So I exited the position in full around about this level, and as you can see, price has tracked up and would be fast approaching my stop. If I look on my trade management sheet, that trade cost me, well, 91 quid. Got out of the position all at once. That was one exit, so you know, a very, very small loss compared to what it could have been, and that's because I followed my rules and exited on the correct signals. So pretty pleased with how I performed on that trade, albeit it was a losing trade. It was a winning trade because I followed the rules. The other trade that I have on in my major pairs is in US dollar CAD. So I bought here, we've tracked up, we've now traded down here. So getting a bit of heat on this trade, but this very well could be a retracement into this previous high before we bounce back up. If I look at what happened, here, we traded up, we came down, and we bounced back up. So you know, this is an upward trend. I did make a slight mistake on this trade as well. This is my full house strategy, and my strategy says that price needs to be above the simple moving averages on the weekly, daily, and 240 chart to take a full house trade in the direction of the simple moving averages. Also needs to be above the daily exponential moving average, 10 exponential moving average. Now, I put this trade on and then realized that in actual fact, on the weekly chart, when I took the trade, we were above the daily, but on the weekly chart, when I took this trade, the last candle close on the week, at the end of last week, was below the 50 simple moving average. I only react on the close of a candle. We are now kind of moving down towards perhaps getting underneath this 50 simple moving average on the week. If we do that, I'm definitely going to be out. But I decided to hold this trade even though I'd made a slight mistake there, because the probability is that we're probably going to close above the 50 simple moving average on the week, which means that, you know, there's a probability, certainly the way I see the market, that we could still track higher to hit my target. Finally, on my synthetic pairs, I took a Golden Gate strategy, selling the Swiss franc Japanese yen. Took that here when we closed below the 50 simple moving average on the 240 chart. Now my target is below the bottom of the range here, and there's a really good reason for that. And the reason for that is clearly visible on the daily chart. This is the weekly trend line down, the turquoise line. We're under the we're under the daily, we're under the daily 50 and the daily 200. I think there's a really good probability, in fact my target's just below this level here, which could arguably be seen as the bottom of the range. I think there's a really good probability that we could shoot down here and start testing this the low of this this trend line. If I look at this on the weekly, you'll see this weekly trend line more clearly. So what it looks like is, you know, lower high, lower low, lower high, not lower low there, but a period of consolidation. We could then be pushing down maybe towards this this low level here, which is what I call a SIG 1 level, which is the 5 and 3 year low. So that's it pretty much for the week. As always, anything can happen in the currency markets. My job is to protect my capital. The thing that I'm thinking about a lot this week is a statement by Paul, or advice from Paul Tudor Jones, probably one of the best traders ever in the world, who says that before you can be successful at trading, you have to learn to play good defense, which means protecting your capital, and that is at the cornerstone of my strategies. And you know, I live to fight another week, and next week, after a couple of days rest at the weekend, the market analysis on Sunday, I'll be ready to trade the final couple of weeks of the month, in line with the 36-month Forex trading challenge.
Closed doors, I'm a fool for your love.